Welcome, grade 12s. Yes, you are on accounting with Ashraf Patel. What are we looking at? We are busy preparing for the exams. So, today's lesson is about, you guessed it, fixed assets. Now remember, this particular topic can appear as an independent question. It can appear as part of an adjustment in your financial statements, or it can appear as a note to the balance sheet, note number 3, the one that you fear the most. And yes, it could also appear as part of your cash flow statement. So that is why it is important for you to understand this section and see exactly how you go about answering questions that would impact with regards to your fixed assets. Okay, today's specific question says, prepare the asset disposal account, right, in the general ledger, taking into account the donation of a vehicle. It says you also have to prepare the fixed asset note to the balance sheet. And it also expects you to show calculations for your depreciation. And why do we do that? In order to earn part marks. Okay, let's look at our information. What do we have here? We are told that the following balances appeared in our books with regards to land and buildings, vehicles, equipment, accumulated depreciation on vehicles and equipment. We are also told that a new storeroom and extensions to the office block were completed. We are also told that 2 new computers were purchased, right? No equipment was sold, and we are told that on the 1st of October 2015, an old vehicle with a cost price of 70,000 was donated to a local children's home. The accumulated depreciation on this vehicle was 66,000 Rand. Okay, we are also told that vehicles are depreciated at 20% per annum on cost, and that equipment is depreciated at 15% per annum on the carrying value. That's the information that we have. Right, now, what do we need to do? We need to prepare the asset disposal account. Now, before we go in and prepare the asset disposal account, I want you to do this for me. And I'm going to give you a minute to draw up for me the table that you need to prepare when you are doing an asset disposal of utmost importance. Go for it, guys. Just 1 minute, and then let's see what you have. Welcome back, guys. Regarding this year, remember, asset disposal is a topic that is covered in grade 11 as well. So the grade 11 accounting boffins out there, if you can get yourselves over to this lesson, make sure that you're also part of it, because definitely you can benefit from it, because as I said, you've done it in grade 11, but it's examinable in grade 12 as well. Okay, now this is the information that we have. Let us do this in terms of what I said. We want to draw information that's going to make our calculations easy. 1, depreciation. 2, the cost price. 3, the accumulated depreciation. 4, the carrying value. 5, your selling price. And yes, eventually your profit or your loss on sale of asset. Got that? Right. The cost price of this vehicle that we are disposing of was, in terms of my information, it was an amount of 70,000 Rand. There's my cost price. Okay, let's put that in to my information. There's my cost price, 70,000 Rand. Okay, it had an accumulated depreciation, right? Let's get the information. Accumulated depreciation was 66,000 Rand when at the beginning of my financial year. Therefore, the first figure here would be your 66,000 Rand being your accumulated depreciation. And remember, you always put a plus sign alongside it because you're going to depreciate it for the current year. Right, let's do that. In terms of my information, it says here that vehicles, firstly, when was the vehicle disposed of? It was disposed of on the 1st of October, sometimes during the financial year. Okay, this means, therefore, you have to do a calculation. Do you remember? Whenever you are working with depreciation, you use art, amount, rate, and time. Okay, the amount is 70,000. The rate of depreciation on my vehicles would be 20% per annum. And the time component, this vehicle was disposed of on the 1st of October. That means, count now, it would be January, February, March, April, May, June, July, August, September. 9 months times 9 over 12. Why? It was on the 1st of October that we disposed of this asset. Okay, let us pick up our calculator and immediately we say fine. It was 70,000, so we say 70,000 times 20%. Let's use the other function we got here. We can say 70,000 times 20 divided by 100. Same thing would give us an amount of 14,000 Rand. Divide that by 12 times 9, and this will be equal to 10,500. Now, a very, very important calculation, the 10,500. But watch this here. And this is the important concept. Please, I want you to pay attention to what I'm doing now. If I add my depreciation that I calculated to be an amount of 10,500 to my accumulated depreciation, watch this here, guys, 10,500, and if I add these two, 76,500 would be my total. What do you notice? What are you taking note of here that surely doesn't make sense? Watch, the cost price of my asset is 70,000 and an accumulated depreciation of 76,500 tells you that the asset has a negative value. And that is not true, because by definition, an asset is something that has a possession which has value. So, when you are faced with a situation like this, what do? This is what you do. Ignore that component completely. Forget about it. Ignore the 10,500, because you cannot have a situation where your accumulated depreciation results in you having a negative carrying value. Let me repeat that. You cannot have a situation where your accumulated depreciation is greater than your cost price. So in this case here, the maximum depreciation that you can write off is 3,999 rand, which will then give you your cost price, if you add your total depreciation, to give you a figure of 69,999 rand, and you are left with a carrying value of 1 rand. Remember, you donated it, so your donations would be 1 rand, and obviously, because your selling price is equal to your carrying value, there will be no profit or loss. So, in terms of my asset disposal, you can clearly see that the 70,000 is your cost price of the vehicle that you are disposing, right? And you have accumulated depreciation on that vehicle. Let's do the two components. The opening balance was the 66,000 rand. Remember, in my table, the first part of my calculation, just to bring it to your attention, there's the 66,000. Then you added the 3,999 rand for the current year to give you an accumulated depreciation of 69,999 rand. Clearly you can see this vehicle was donated. Therefore, you've got a donation, right, to the value of 1 rand. And yes, the asset disposal account would then obviously close off, because that was the purpose. Your purpose of an asset disposal account is to ascertain the profit or the loss on the sale of the asset, and then obviously you would take that into consideration, and you would also then be able to complete your note number 3. So that's what your asset disposal account looks like. Okay, carrying on now, there's my information once again, and now I'm expected to do this note to my balance sheet. Clearly I can see that my land and buildings at the beginning of the year was 1,200,000. That's a given figure. I am told that my land and buildings at the end of the year is 1,450,000. So clearly, if that is the case, there must have been an addition of 250,000 rand. Why? If I add the 1,200,000 plus the 250,000, which was the addition, and yes, you'll see that the information told you that. Watch. A new storeroom and extensions to the office block were completed during the financial year. Clearly you can see they are referring to this figure here of 250,000 rand, therefore giving you your carrying value now of 1,450,000 rand. Remember, land and buildings is not subjected to depreciation, so you don't have to worry about any of the calculations. Right, let's go on to my vehicles. With the vehicles, I have an accumulated depreciation at the beginning of the year of 344,000. Watch what I do. I slot it in. My accumulated depreciation is 344,000. Okay? And it is a negative asset. Therefore, I subtract it from the value of my assets. I would then take my calculator and take the amount of 820,000 minus 344,000 accumulated depreciation to give me a carrying value of 476,000 rand. Okay? That's my carrying value when? At the beginning of the year. Okay. Now, what else do I know about my vehicle? Remember, I disposed of a vehicle, didn't I? We did the calculation. And the disposal of that vehicle was the 1 rand. Do you recall? Certainly you should. Now, coming to the depreciation component. Remember, you had already calculated depreciation of 3,999 rand. On what? On the vehicle that you had sold. Now, you also have vehicles that you have not sold. So, let's look at that one. Take your 820,000, okay, and from your 820,000, subtract the vehicle, the cost price that you sold. Remember, the cost price of that vehicle was 70,000 to give you a value of 750,000. Now calculate your depreciation. Your depreciation is calculated on cost at 20% per annum times 20 divided by 100 to give me an answer of 150,000 Rand. Okay, so with regards to this one here, immediately I take my depreciation and I say plus 150,000 Rand. That would be my accumulated depreciation. The total now, the depreciation that went to my accumulated depreciation would be a figure of 153,999 Rand. And you can see, where's that coming from? It's coming from the sold one, there we go, and the unsold vehicle at 150,000 Rand. Okay, guys, that's just the vehicles. I'm sure you can see now that the moment you reach the stage where an asset has become old, it's reached the end of its useful life, it would now become an asset with a carrying value of 1 Rand. You want to know more? The place to be is with us. See you in a jiffy. Welcome back, accounting boffins. Yes, now remember, you need to complete the bottom part of your note. So you start off with your cost price. Your cost price was the 820,000, you recall. So let's get the cost price of 820,000 onto our calculators. 820,000 minus the 70,000 that you disposed of to give you a value of 750,000. Notice that you had no additions. So your cost price at the end of the year is an amount of 750,000. Okay, now let's work backwards. Let's take the value here. At the beginning of the year, we had a value of 476,000. So take your 476,000, subtract the 154,000. You see where's the 154 coming? 153, 999, plus the 1,000 is 154,000, which will give you a value of 322,000. So that value is 322,000 Rand. Okay, now take that value and you say minus 750,000. It will give you a value of 428,000. What is the 428,000? The 428,000 is your cumulated depreciation at the end of the year, and if you subtract that, you will get the value of 322,000 Rand. Okay, let's go on to our equipment. Once again, let's put in our accumulated depreciation for equipment. The accumulated depreciation on equipment was 88,000 Rand. Therefore, let's slot it in 88,000 Rand at the beginning of the year. Keep that in mind. So we take our calculators and we say 195,000 minus the 88,000 at the beginning of the year to give me a value of 107,000. Remember, that is your carrying value when at the beginning of the financial year. Right, what else do we have here? Did we buy more equipment? Yes, certainly. Let's look at the information. 2 new computers were purchased on credit. No equipment was sold during this financial year. Okay, right? Then, so if we bought 2 new computers, right? Now, the question that you need to ask yourself is, if new equipment was purchased, then certainly it needs to be indicated in my note to my balance sheet. And if I am told that no equipment was disposed of during the year, right? So there was no disposal, I can see that. Look at my equipment. What's my closing balance? 217,000. Aha, information that I need. So immediately I say, fine, put in my closing balance of 217,000 Rand. Okay, take my calculator and I say 217,000 minus my opening balance of equipment, which was 195,000. Okay, 195,000 will give me a value of 22,000 Rand. Clearly you can see that you had purchased new equipment to the value of 22,000 Rand. Okay, now we need our depreciation. On what? On our equipment. Fine. Number one, look at my method of depreciation. Important to identify, equipment is depreciated at 15% per annum. On what method, grade 12s? On the carrying value, meaning we are using the reducing balance method. Let's do that. Step number one. Let's take our equipment, and in our equipment it says there that my carrying value at the beginning of the year was 107,000 Rand. Therefore, take the 107,000 Rand times 15%, and that gives me a figure of 16,050. Right, now what did I do? Did I calculate my depreciation on the 195,000? No. Why not? Because it's diminishing balance method. On which amount did I calculate my depreciation? On my carrying value. There's it. On the 107,000 Rand. 15%, because that was equipment that I had for the entire year. So my art would be 107,000 times 15 over 100 times 12 over 12, indicating that I've used that equipment for the entire financial year. 16,050 is my figure. Remember, 16,050. Remember, this is now the equipment, the depreciation on the equipment. But I'd also purchased new equipment. That's right. When did that happen? The new equipment was purchased on the 1st of July. Aha, dates, guys. Very important. Dates. In accounting, your dates are crucial. So, 1st of July, August, September, October, November, December. 6 months. Does it change my calculation? Certainly it does. Watch. 22,000 over 1, that's my A, times my rate, which is 15 over 100, times my time, which is 6 over 12. Okay, let's do that. So we've got 22,000. We've got 22,000. That was the new equipment that we purchased, times 15 would be equal to 3,300 for the year. Divide by 12 times 6, half the year, would give me a figure of 1650. Immediately you can see, bring in your depreciation figure here of 1650. Add the two components together. That means your 1650 plus the other amount for depreciation was 16,050. 16,050 to give me a value of 17,700. 17,700, and that would be the value of my depreciation on my equipment. Once again, what do? Look at this here. You take your depreciation, your accumulated was 88,000 Rand plus 88,000 Rand. Watch, what am I doing? To give me a figure of 105,700, immediately I say, if that is 105,700, what have I done? I've added my accumulated depreciation when? At the beginning of the year. To what? To my current year's depreciation of 17,700 to give me a total of 105,700. And here again, what do? We take the 105,700 minus 217, 1, 2, 3, to give me a value of 111,300, 111,300. What is that? That's your carrying value at the end of your financial year. So clearly you can see here what is important, that when you are working with your notes, your note number 3 specifically, guys, important information, make sure that you are able to calculate all aspects of note number 3 in terms of the depreciation figures. Watch what I've done. I've shown my calculations separately here. Very important. So in the event of you perchance making an error with one of them, you can get part marks for these figures here. I hope you clearly understood this note number 3. Let's look at the next interesting question. It says here, explain how the fixed assets register will assist the internal auditor with her duties. Provide 2 points. Okay? We're going to give you 1 minute to give us an answer to this question. Go for it. Your minute starts now. Okay, guys, let's see what are your responses. Explain how the fixed assets register will assist the internal auditor with her duties. Did you mention? Yes, that your fixed assets register is a detailed record of all your assets reflected by the account in the general ledger. It shows you the individual assets, the age, and the carrying value. Remember, your general ledger does not show you that. Okay? Also, in this way here, it can assist us in determining which assets need to be replaced, right? Or you could use it in determining the carrying values, like we said here, what was the carrying values of my assets. Okay, grade 12s, that was the first part of our question. We're going to go move on to another question now, and we're going to match column A with column B. And in this particular question, you are given information in column A, which you have to match with column B, right? And let's take the first one. If I say memorandum of incorporation, what do you think it would be, right? what do you think it would be? I would align that one with, it sets out the rights, duties, and responsibilities of shareholders and directors. So immediately, my correct answer here would be D. Limited liability, this one should definitely not be a problem for you. Remember with companies, what we know about limited liability, it says here that the business is responsible for its own debts. And in case of insolvency, owners only lose their investments in the business. That's right. When they're talking about limited liability, right, they are referring to the debt of the investors is limited to how much they have invested in a company. Authorized share capital, this one would be the total number of shares that a company can issue, not what it has issued. It's the total that the company is authorized to issue. So that would give you, that would be which one we said? B, right? So we put that one in for number 3. Number 4 says, IFRS, okay, guidelines for the preparation of financial statements to ensure consistency. IFRS, you know, stands for International Financial Reporting Standards. Yes, so obviously that would be A. And then the last one is the matching concepts. It says here that revenue generated during an accounting period should be matched to expenses during the same period. Immediately you tell yourself, right, that would be C. So in this way, you can see the question is an appetizer to get the adrenaline going up to a certain way, to get you going into the question. And then we're moving on to another part of the question. So, if you want to know more about share capital, dividends, the place to be is with us, guys. Take a quick break, a quick breather, and see you just now. Welcome back, guys. I'm sure you took a quick break and you're ready for the challenge on the general ledger and concepts dealing with companies. Remember, we are busy with exam preparation, and these are all topics that we've covered in term 1 and term 2. So in this way, you can see that if you go through these topics, you are preparing for an exam. So therefore, we call it exam preparation. Okay, let's get into it. Number 1, you are expected to do a SARS income tax account. It is expected of you to do an ordinary share dividends account, and you are expected to do an appropriation account. Right, immediately, let's look at the information. With regards to my SARS income tax account, the first thing that I look for is my balance. Now again, I'm going to ask you the question before we go there. What type of an account is SARS income tax? And the answer should be, that's right, it depends. On what? On the balance that appears in that account. What am I referring to? Watch here. Look at my SARS income tax account. At the beginning of the year, oh yes, remember guys, the love arrow in accounting, beginning of the year, end of the year. Remember, if a love arrow is misdirected, it creates havoc. Yes, you've experienced it, haven't you? Well, the same applies in accounting. Okay, so my SARS income tax at the beginning of the year has a credit balance of 6,300, meaning that a credit balance of 6,300, I am owing SARS an amount of 6,300, and that's my balance at the beginning of the year. Once again, guys, I'm abbreviating because of time constraints and because Ashraf has a license to abbreviate. You do not have a license. You make sure that in exam conditions, if you are expected to do this account, that you write it out in full. Got it? Brilliant. Okay. Then, number 2, look at my SARS income tax account again with regards to the information. What do I know? The closing is a debit balance of 3,400. A debit balance. That's right, grade 12s. It has a debit balance of 3,400, indicating that this balance here, after you bring it down, would have a debit balance. Remember that? Okay, so there's your 3,400 as your balance brought down and your balance carried down. Okay, what else do you know with regards to income tax? Let's look at our information. We are told that 256,000 Rand was paid to SARS in respect of provisional income tax for the year. This was done in 2 equal installments, in September and in February, respectively. Okay, so step number 1, let's take the calculator and take the 256,000 and divide it by 2. Why? Because we've paid in 2 equal installments 128,000 Rand each. Okay, that means therefore that you've paid 128,000 and you've paid 128,000. Remember, in both of them, your contra entries would be bank because you've paid those amounts to SARS. However, there's other information that we also have to take cognizance of, and that is, watch here. On the 5th of March, amounts due to SARS and the shareholders were paid. In other words, if you're looking at this account here, you can clearly see that you've paid an amount of 6,300, which was a payment which was due at the beginning of the year. Why? Because my SARS income tax at the beginning of the year was a liability. Clearly you can see it. I had to repay that amount to SARS at the beginning of the year. Make the payment of 6,300. Now, looking at this account here, what information does not appear here? Clearly, you can see that you've got an amount of 6,300 plus your 128,000 plus another 128,000, right? Minus 6,300 minus 3,400 will give you a figure of 252,600. Now watch. What is the 252,600? The 252,600 is your income tax for the year. And immediately you can see that yes, if the amount of 252,600 was my income tax for the year, then immediately in my appropriation account, 252,600, you can include it as your income tax. Why? You've calculated the figure in your account here where you've shown 252,600, and immediately here you would include the amount of 252,600 as part of the entry in the appropriation account. So you're working simultaneously. So when it comes to the appropriation account, you don't forget that figure. Right. Okay. Let's go back. With regards to my dividends, what do I know? I'm told that the business has an authorized share capital of 500,000 shares, of which they've sold or issued 60,000 Rand at the beginning of the financial year. Obviously, 500,000 times 60% will give you 300,000 shares as the number of shares that have been issued. Okay, with regards to my dividend, what am I told? I'm told that on the 31st of August 2014, the directors declared and paid an interim dividend of 45 cents per share, right? So, with regards to my new shares, on the 20th of November 2014, the business issued a further 80,000 ordinary shares at an issue price of R5.20 each. These shareholders were not entitled to interim dividends, but they will receive the final dividend. In other words, these new shares for the interim dividend were sold ex-dividend. That means they were sold excluding a dividend for the interim dividend. Remember, we spoke about this in our earlier lessons. We said when new shares are sold, check whether they are sold ex-dividend or whether they are sold cum dividend. What does that mean? If we say cum dividend, we are talking about cumulative, right? Cumulative, from the word cumulative. That means those shares would be entitled to a dividend. Got it? Okay. So we take the 300,000 shares because the new shares obviously did not qualify. So you take your 300,000 and they were sold at a dividend of, I think it was 45 cents. Let's check. There's it. They were sold for, the dividend that was given on those shares was at 45 cents per share to give you a value of 135,000 Rand. So immediately you tell yourself, fine, there's the 135,000 Rand. It's my interim dividend. It was declared and paid. The operative word is paid. Therefore, you've got your 135,000 Rand as your interim dividend. Okay, then, what's this here? You are told that with regards to dividends, a final dividend was declared on the 28th of February 2015. They're telling you that. But where's the information for it? What, do we go into panic mode? No, guys. Don't fear. That's right. When Ashraf is near, watch this out. What information am I given? Look at this. Shareholders for dividends, at the end of the year, there's an amount of 228,000 for the end of the year. Meaning what? What entry did we process for us to arrive at shareholders for dividends at the end of the year of 228,000? A debit to ordinary share dividends, therefore, a debit to ordinary share dividends, 228,000, and a credit to ordinary, let's do that again. A credit to my shareholders for dividends. You can see where is it coming from. Once again, look at your information. 228,000, you can see appearing when? At the end of the year. Therefore, 228,000 in your ordinary share dividend account. There goes. Important information. Take your 135,000 plus 228,000, and this will give you a total of 363,000. What is the 363,000? That would be your total dividend for the financial year in terms of, one, your interim dividend and your final dividend. That means your expense in respect of dividends for this financial year amounted to 363,000, which goes where? Yes, it gets closed off to your final account, namely your appropriation account. Aha, do we need that information? I'm sure we do. So therefore, in my appropriation account, I've got 363,000 coming from where? From my ordinary share dividends. Got it? Brilliant. Okay, what else do we know? We are told that with regards to my information, the net profit for the year was correctly calculated at 842,000. Immediately I tell myself, fine, 842,000, there goes, 842,000 is my profit and loss figure that is calculated and given to me. What would have happened if I had to calculate that figure? Yes, guys, you could have been given the tax rate as a percentage, and based on that, you could be asked to calculate your profit and loss. Be wary of that, please. Sometimes you are given the net profit before tax or the net profit after tax, and you are given a tax rate. Use the tax rate to be able to calculate either the profit before or after taxation. Okay, now, you have the 842,000. Okay, so let's take the 842,000 minus your income tax of 252,600 minus your ordinary share dividends of 363,000, and that's equal to 226,400. 226,400. What is this here? This is your retained income at the end of the year. Now, allow me just a minute to give you an explanation with regards to how I calculate my retained income. There are three methods that could be used, right? I have found over the years and a lot of experience that this is the easiest method for you to deal with the appropriation account. All that you do is bring in your profit and loss for the year, bring in your two components, income tax and your ordinary share dividends, right? Once you got them in, bring in your retained income, and that becomes your retained income at the end of the year. A question arises: what happens if my income tax and my ordinary share dividends are greater than my profits? No sweat, guys, not a problem. Then your retained income would appear on the credit side of your appropriation account and be transferred like that to your retained income account. We have done very important examination revision. Make sure that you are au fait with what we have done. And guys, stay tuned, because we're going to do more examination preparation and examination revision for the future, so you can see we are preparing you for an exam. But you are accounting students. And yes, you definitely, guys, you don't operate at ground level. You aim for the moon, don't you? Definitely. And if you don't get there, you're going to be an accounting shining star. Until the next time, keep practicing and be good. Bye-bye.